You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com. The futures markets can be downright scary. Limit up, limit down. What the heck is RBOB anyway? Are they going to dump a truckload of soybeans on your front lawn if you click the wrong button? Come to think of it, maybe you should just stick to your comfort zone. Or you can break out of it with the Futures Rundown. The Futures Rundown is here to help you make sense of these scary markets. We'll analyze all the top futures trading activity, explore the ins and outs of your favorite products, explain exactly how futures work, and hear from leading experts in the futures markets. We'll even tackle all of your wildest futures trading questions. If it involves futures, then you'll hear about it on the Futures Rundown. The Futures Rundown is brought to you by T4 Futures and Options. Elevate your trading experience with the T4 Futures and Options trading platform. Whether you prefer desktop or mobile applications, T4 delivers low latency and professional grade functionality for both traders and brokers. Take advantage of theoretical sheets, strategy solver, MBO, advanced charts, and a suite of powerful features to enhance your trading strategy. Visit ctsfutures.com or search for T4 Futures and Options on Google to register and get a free month. And now, it's time to break into the futures markets. It's time for the Futures Rundown.
All right, everybody, that music means we are back. It is Wednesday. Time to roll out the Futures Rundown once again. My name, of course, Mark Longo from theoptionsinsider.com. Back from my sojourn to the Southern studio and raring to go out of the Chi-Town studio here to talk some futures. Remember, if you want to join us on the Pro for live access, early access to a lot of the stuff we had coming out of OIC, as well as some exclusives from there, as well as shows only you folks get, like Pro Q&As with our good buddy Uncle Mike Tusaw. We touched on a lot of the assets we talk about on this show yesterday: silver, gold, the 10-year note, equities, a whole bunch yesterday on the Pro Q&A, as well as options oddities every week, as well as get your name in the hat to win a fun prize like our Pro member did just about an hour ago. Madam Gigi won the May Pro Trading Crate. Congrats to her. You want to get your name in the hat for the June Pro Trading Crate, the only place to get it on the planet. The optionsinsider.com/pro is the place to go to learn more. As we learn who's joining us on the old Futures Rundown this week, I'm pleased to welcome back our old pal, none other than Dan the Man Gramza from Gramza Capital Management. Dan, welcome back to the Futures Rundown, sir. It's been a while since you joined us on this show. Back since December 11th of last year, sir. Been a while.
Boy, but time flies, doesn't it, Mark? And I'm really excited about being with you and exploring these markets together.
All right, then, let's do it. Let's begin exploring, shall we, with a little bit of the old trading pit.
It's time to break down all the action that's lighting up the futures markets this week. What's limit up and what's crashing and burning? Let's find out. It's time to enter the Trading Pit.
All right, everybody, welcome to the Trading Pit, where we bravely enter and see what's lighting up the futures markets this week. And Dan, I have some movers and shakers I want to get to, some things lighting it up to the upside and to the downside, some volume bangers. But before we get there, sir, Mr. Dan, what is catching your eye this week in the world of futures, sir?
Well, I think we need to take a look at what's happening because of the tariffs and that uncertainty. The resiliency of the stock market in some ways, I think, is very interesting. And also these currencies. It tells us something about the global point of view about the U.S. dollar. And so what we've seen is something that should be very bearish for these currencies is just the opposite. What we're seeing are buyers coming in against all the majors. So I find that really interesting, especially our friends in Canada. So we're seeing some action there. We're also seeing some markets that I thought would be volatile really aren't, and that would be like Bitcoin. But if you look at interest rates, at 10-year notes, 30-year bonds, they're moving today because yields are coming off. So those are interesting, I think, as well. Metals aren't doing, I think, what people expected, except copper. Energy and nat gas kind of quiet. And when it comes to the eggs, we are seeing some activity of which I think is a little puzzling in terms of that behavior. So that's kind of an overview of some of the things that I'm looking at that I see out there in the futures world.
Well, Dan, our chat is excited to have you back on the show, so they're having a good time. So we're going to have a good time on the show today, I think, Mr. Dan. All right, I'll kick things off. We'll keep it in the spirit of optimism. I'll kick things off to the upside, and then we'll go from there, Mr. Dan. All right, listeners, our top 5 movers for the week this week to the upside here on the futures market. Go ahead. I'll give you a couple of seconds right here. See if you can guess what they are, listeners. Coming in at number 5 this week, we're kicking it off in energy, listeners. It's our old pal Nat Gas. Up 4.05% this week. And then number 4 from the energy, we go straight to the metals in particular. Mr. Silver, up 4.28% for the number 4 spot. Number 3, keeping it in the metals, but not precious. No, we're going out to steel. U.S. Midwest Steel, listeners, up 4.31%. Is there a more tariff beset asset than steel and all the goings on with that drama over there, listeners? Nonetheless, good week for them, up 4.31%. Number 2, listeners, keeping it in the metals. We're getting base. We're going out to copper, listeners. Copper, number 2, up 4.4% over there, listeners. And the number 1 size upside mover this week, listeners, can you guess? I'll give you a couple of seconds. I'll give you a hint. It's not in the metals. It's not in energy. It's actually in ags. It's our old pal oats, Dan. This continues to remain just a mystifying product to me. Once again, we're talking about it every week on TWIFO and on the Futures Rundown. The action, the volatility is there. Oats, number 1 to the upside this week, up 4.59%, listeners. And I guarantee you, Dan, if I go pull up the options chain, it'll have done 3 contracts this week, sir. Why do oats mock me so?
Well, at first, your observations are right on target. Oats is that stable product that we need. It is primarily animal feed, more so than it is our daily bowl of oats. But we don't see the global demand for oats. If you think about wheat and soybeans and corn, those are truly global markets. We don't really see that with oats. So it's a fairly small marketplace, so when we look at the price action because of that, it really can have that kick in volatility. But if you look at, as you mentioned, if you look at options, if you can find them, and then the second, if you look at the volume on oats, it's fairly low. And it's just because of where it fits into the big, I think, agricultural picture. So does it have movement? Yes. Does it have high liquidity? No. Does it have a lot of options on it? No. Is it interesting? Yes. But I think that's kind of where it begins and ends with our friend, Mr. Oats.
Dan, I may have undersold it. I said it's done 3 contracts this week. I just checked while you were talking. A whopping 13, sir.
Oh,
explosive.
there you go.
Over 4x. It's a party time in Oats Town. Just unbelievable volume here, including a 10 lot, Dan, of the 385 calls. Oats right now,
Wow.
386.5. Dan, can you believe what an embarrassment of riches the Oats volume is this week, sir?
No, it's not surprising. You know, it's doing what Oats should do. And so from a trading point of view, it's one we can take a peek at, but is it one you want to jump in with both feet? I don't think so.
Yeah, the only other product that comes to mind when I think of this is also very volatile and yet doesn't really trade any options is lumber. You know, the other thing in the ags. And lumber, I just checked 51 contracts. Actually, a pretty good week for lumber. But
well, you're right there. Now, that's another good example. But one of the differences between lumber and oats, I like what you just said, is that lumber can not only be volatile, but the volume can pick up depending on what's happening in terms of housing. And it also depends on what's happening in terms of harvest. That contract that you look at in lumber, that's primarily the northwest and the northeast part of our country. Plus, we also get lumber from Canada, our friends up there. So it's a market that typically it chugs along. It doesn't really show us too much of anything in terms of volume or open interest, as you just mentioned, but it's one that really can have some volatility and some volume. So it's important to look at it from that point of view. The other thing, Mark, that I find interesting about lumber, it's not the normal course of events. In other words, if you look at housing permits and housing construction, there's a certain amount that we're going to be using fairly consistently. But what amazes me is when you and I think about, unfortunately, the wildfires that we had in California, the hurricanes and storms that wipe out tremendous areas and tornadoes. Those homes in general are going to use some lumber. And that's something to take a look at when, unfortunately, we're faced with that type of reconstruction. And sometimes it becomes very volatile, and other times it seems to just absorb all that potential increase in demand. So it's a unique market in that regard.
A lot of unique things in our upside movers this week, Dan, outside of the just complete mystifying nature of oats and lumber. We've got a lot of metals. We got silver, we've got steel and copper, and of course, nat gas in there. Anything catching your eye to the upside this week, sir?
Well, when it comes, if we stay with the complexes that you just mentioned, nat gas, the thing about that one is that we have a market that has a lot of supply. And one of the pieces that's missing in nat gas is China. China, you know, their economy is a very dull light right now. It's not shining too brightly, and it's reflected in their demand. And, you know, one of the places they use nat gas is industrially, and we're just not seeing that demand coming into the market. However, supply is there. And and so therefore you expect a sideways move. And that's kind of the way we've been with nat gas. The potential here is for a move to the upside just based on the uncertainty. We have the Trump China discussion coming up. And so maybe that could shed some light on it. Most of our nat gas right now that we ship, the LNG, goes to Europe. So there is global demand, but we're not seeing it to soak up the supply that we do have. The big deal for our friend nat gas near term would be a move above 380, 380.85. That's what you'd want to see in the short term, meaning within the next week. The longer term major level for nat gas is $4. So do we get above that? That would be the next hurdle. That won't be easy. And on the downside for nat gas, 340, 320, those are major potential support levels as we go lower. So right now, I think the way nat gas has behaved over the last few weeks or months actually is that we're looking at a fair valued energy. So it's a hedging market more than it is a speculating market.
Interesting. Fair value, sir. Let's see if we can find some fair value to the downside as we go. Let's see what's lighting up our screens to the red this week, listeners. Number 5, we're going out to dairy. Dan, it's cash settled cheese. You might love it. I'm lactose intolerant, so I can't have it. But I can look at it from afar, off 2.92% this week. Number 4, listeners, we got Vol coming crashing back to earth. Remember not that long ago, a few weeks ago on the show, when VIX was the best performing asset of the year, I said, just keep an eye on that. It's probably not going to hang out there too long. VIX coming back to earth now, off 3.61% just this week. Number 3, we're going back to the ags, this time to the beans, in particular soybean oil. Soybean oil off 4.5%. Number 2, out to the realm of ethanol, off 5.25%. Don't talk a lot of ethanol anymore. Maybe we'll get up to that a little bit on the show today. And taking the top spot to the downside this week, ever so slightly, off 5.27%. Keeping it in dairy, it's class 3 milk. Dan, we got a bit of a dairy apocalypse on our hands this week, along with soybean oil taking a hit and ethanol and a little bit of the old VIX. What's catching your eye, sir?
Well, it's kind of interesting when you think about I'm trying to think where we want to begin. Soybean oil and soybeans, I think it's a little bit of a mystery right now because we see a mixture of fundamentals that are out there. The big deal when it comes to these ags is where are we in the planting process? How much has emerged from the ground? Is it normal? Is it slower than average, not slower than average? Because the thing that's interesting about those markets, they have a fixed window of time to produce. So we can't plant them just at any time. We have a window of opportunity to plant, and that can have an impact on what is planted. So if we look at the north to the south of our country, wheat and soybeans and corn, all right, how much are they going to plant? What do they plant? Where can they get the biggest bang for the buck? That decision is being made. What can they get planted? That window of time is shrinking in that regard. If you look at Kansas, for example, the wheat market they're planting for winter wheat looks good. And right now the product emergence and the heading of that wheat looks good. So we see some positive things there. So there's always that challenge of what's in the ground, how well is it growing? And the big deal, since we're talking about soybean oil, is watch the first couple weeks of August. Soybeans need moisture the first couple weeks of August. If we don't get that, then it implies the number of flowers, the pods that you get, the yield that you get can dramatically shrink. So if you're going to pay attention to how a product grows, that's a time frame for that you want to pay attention to. The other one is, knee high by July for corn. So that's one we want to pay attention to. Wheat is a market that's interesting because it is truly a global market. If we think about this Russia and Ukraine situation, that adds a lot of tension when it comes to wheat, especially for Europe. A lot of the wheat for Ukraine goes to the Middle East and to Europe. France is the largest wheat producer, by the way, in Europe. But so it's a fascinating market. Other countries produce a lot of these products. So, if you look at wheat, for example, India is a huge producer of wheat, and so is China. They're gigantic. However, their consumption pattern outstrips their supply. So for the last 15 years or so, they've been importing wheat. So each one of these has a little story fundamentally behind it. When we look at ag markets in terms of, how much is left from last year, how is it growing this year, what is global demand, and will we meet it? So I think, Mark, just the last thought, if we're looking at these markets, you want to separate what I call anticipatory fundamentals and reality fundamentals. Anticipatory fundamentals would be, let's say in July, since we're talking about soybeans, let's say in July, the National Weather Bureau says, holy Toledo, we're going to have drought conditions through July and August. Soybean prices take off. Now, have soybean prices taken off because we don't have enough soybeans? We don't know. We, wait for them to grow. But that market is moving on the anticipation that we will have drought conditions and prices can move up. That's different than a fundamental says global demand is 8 billion bushels and we are 1 billion bushels short. So there's not enough soybeans to meet global demand. The reason I make the distinction is in that second case, when we don't have enough, that could be a very strong trend. So you want a looser stop in that kind of market. If it's moving on anticipation, and we saw in July soybeans take off because it's anticipating the possibility of not having enough. Well, if it rains in August, expect those prices to drop probably faster than they did going up. That means on that type of movement, you and I would want a relatively tight stop. So that's a hell of a way to answer your question.
Well, you brought up a lot of interesting points about the ags. You're right, are fascinating right now. I have to admit, I've been thinking about ags a little bit more, especially locally here. You mentioned the knee high in July. Of course, I saw something come across my phone and indeed my vision that I've never seen before in all the time I've been living in Chicago. Dan, we had a dust storm a few weeks ago, and I watched that blow in from the south, and my first thought was, how dry are the fields to the south there that we're getting a literal dust storm in Chicago, which to my knowledge has never happened before, Dan. So what were your thoughts when that was rolling through? And B, what does that tell us about the local crop right now, sir?
Well, it does say something that's very unusual. I totally agree. In fact, what's weird about it, I had just gotten my car washed. And I was out and I'm hearing the news, oh, there's a dust storm. And I'm thinking, dust storm? What kind of, what? Anyways, my car was this light brownish tan color with all these little dots in it from the rain. It really did hit us. And it does say something about the topsoil. What I don't know about that, Mark, is how extensive it was in terms of our growing in Illinois. Did it affect an area? Yes. How big of an area? I don't know. And the heaviest, like we're again talking about beans and growing, some of the richest soil in our country in terms of production is in southern Illinois. And whether or not that was affected, I don't know. And what it makes me think of, Mark, the thing which I know you're probably familiar with too is if it's a tense weather condition for ags, but it's raining on LaSalle Street, then the idea is ags will come down because they're getting the rain. But it doesn't mean it's raining in the areas that it needs to rain in. It's like heating oil in New York when the guys who go at the NYMEX and, it's warmer in New York. Well, that doesn't mean it's warmer in Maine where they use a lot of heating oil. So it's maybe what you and I experienced is that kind of a situation. absolutely crazy. I've never seen that before either. But how much was affected, I think, would be the key. And I don't know the answer to that. But
I will say it was unsettling. I was coming back from dinner a little bit south of the city, and I get that alert on my phone. Then I look into my rearview mirror, and what do I see but what looked like a biblical plague cloud just coming down the highway towards you in the rearview mirror. It was like, wow, that's not something you see every day, let alone rolling towards Chicago. You know, we're not hanging out in the middle of the desert somewhere, or the Dust Bowl of the 20s.
yeah, exactly.
Expect a giant dust cloud to descend on Chicago, but that did indeed occur, listeners. So yeah, wild stuff out here. All this wild stuff, is it translating into some wild activity in the markets, listeners? Well, I guess let's find out, listeners. What does it cost you to break into the top 10 on our most active charts today? It's exactly 300,000 futures. So if you're a tick below that, like let's say WTI today, coming in at 291,000 contracts in the July future, listeners, not going to make the cutoff today. We're just doing a top 10. A number 10, what just barely squeaks in with exactly 300,000 contracts on the tape? It is the June 3-month SOFR contract, which is interesting in and of itself to see SOFR not doing Dece. Usually SOFR goes out a bit of a ways, but today it's all June all the time. In fact, looks like our top 10 is mostly June with a smattering of September in there as well. So a bit of June, bit of Sep. We'll break it all down for you. Number 9, listeners, we're going out to the NASDAQ E-mini, also in June, 344,000 contracts on the tape today. Number 8, to the rates we go. It's the 30-year T-bond, the September contract this time, so a little bit longer term action. 427,000 contracts on the tape today. Number 7 is the Ultra 10-year, September as well, 478,000 contracts there. Keeping it in the rates for number 6, it's the 2-year, also September rates. Going a little bit farther out, listeners, 673,000 contracts on the tape for the 2-year note. Now our top 5, listeners. Spoiler alert, it's going to be a couple of micros in here. It's kind of unavoidable. Number 5 is indeed the S&P 500 micro. So if you're wondering, where are all the equities outside of the NASDAQ? Here you go. It's the S&P 500 micro, the June contract, 767,000 contracts out there. If we saw a September, or dare I say a December contract lighting it up for equities in this 0-day world, listen, then you know something extremely crazy is going on in the markets. Number 4, keeping it in the S&P. It's the S&P E-mini, also June, 857 on the tape there. Number 3, back to the land of the micros, the NASDAQ 100 micro, the June contract as well, 1.017 million. Lately, it's been the only thing that could unseat the 10-year at the top of our list. Not the case today, listeners. So what's number 2? The micro's not even 2, it's 3. What can make it number 2? It's the 5-year note, listeners. Also September, 1.17 million contracts on the tape. That means the big boy, once again, the 10-year note, the September contract, 1.58 million contracts on the tape. Damn, interesting stuff in our most actives today. A lot of rates and a lot of equities. What's catching your eye, sir?
Well, I think it makes sense, Mark. It makes sense from this point of view. Let's look at our environment in terms of uncertainty, in terms of anxiety. And I think that's what you and I are seeing in these markets. So interest rates reflect that uncertainty. So what do people do? We'll see stock markets coming down. Well, if the stock market comes down, that money, because they sold stocks, where does it go? Well, one of the places it can go are interest rate markets. So we see demand for these products like the 10-year note go up because capital is flowing into it. We'll see it with gold sometimes and metals and as capital shifts from one marketplace to another. What's interesting here, with all the uncertainty we have out there, and there's a lot, we still see the stock market holding up. It's still resilient. And we're not seeing anything statistically so far that shows dramatic weakness. I mean, we did have some reports come out We had the service sector was down a bit, and think how much private business hired in that regard. We also have more labor numbers coming out this week that may change the psychological attitude of these markets. But notes and stock market, that I just think is a very logical sectors for where we are globally with the uncertainties out there geopolitically and where we are domestically with the tariffs and other things the market's trying to sort out.
Let's see what we're sorting out, listeners, as we look at what trends are shaping up here for the year. It's already been a wild year, and it's just June, listeners. So let's check out our year-to-date movers out here. Let's go to the upside again. Let's keep the positivity train rolling. Number 5 to the upside, keeping it in a product we were just talking about, soybean oil, up 13.73% for the year, listeners. Number 4, listeners, it's our old pal silver, up 15.89%. Number 3, keeping it in the precious stuff, it's platinum, up 18.29%. Number 2, we're getting base, listeners, it's copper, up 19.43%. And the big boy, our top upside mover for the year, listeners, what could it possibly be? If you were paying attention, you'd notice there's one big candidate out there that I haven't mentioned yet. Yep, it's gold, up 25.12% for the year. Dan, I guess the moral of the story, it's been a good year to have some metals in your back pocket and maybe a smattering of soybean oil, sir.
I think you're right. When it comes to that gold, going back to the times of uncertainty, the underlying assumption is that gold holds value. And we expect order flow to flow towards, or capital to flow towards gold. So not too surprising in that regard. But, you want to keep in mind, gold doesn't always do what you think it should do. So we've seen volatile environments and gold go sideways. But this past year, it's had the afterburners on as more and more demand shifts towards gold. And Mark, the part that kind of feeds this is what we see going on internationally with central banks. That's where some of the biggest demand has been for gold. And it goes back to where's the U.S. dollar fit in. Now, it's still 90% of all international transactions are dollar-based. However, if we look at our friends in China and Russia and other countries, Brazil, South Africa, other places where they say, this doggone U.S. dollar, I don't want to use it anymore. And all these markets that you and I have been talking about on the commodity side, including gold, they're dollar-based. And so people say, well, wait a minute, I'll buy your crude oil, but can we do it in another currency? Sometimes they can, sometimes they can't. Because to convert one currency to another, usually you're going to touch the U.S. dollar along the way. Once you touch the U.S. dollar, that transaction can be held up. And we got $300 billion of Russia assets because it was dollar-based. So they're trying to do something different. They say, wait a minute. How about this? Let's not use rupees or rubles or yuan. How about gold? We can, make our transactions in gold. A non-currency base, although the gold's going to be valued in dollars, but you're not using dollars to make the transaction. So I think it's important to look at not only what we think of as traders demand for gold, but also the shift that we've seen, and this isn't recent, that we've seen for a number of years in the central bank acquisition of gold. Because just one thing to remember, gold does not back a currency. The last currency that was backed by gold was the Swissy, and that stopped in 1999. So central banks are not acquiring gold because it backs their currency. That is not the case. And just as a side thought, I remember being in Frankfurt to teach some classes at some banks, and I had an afternoon free, and I went to the Bundesbank to see a fellow's an economist there to have a bite to eat. And he and another accountant were sort of having some lunch, and I asked them, I said, how much gold does the Bundesbank really need to have? How much is it for psychological purposes? So people think, hey, we're okay, we got some gold, or economic purposes in terms of use of gold? I didn't expect an answer, and they didn't have an answer. And that's just it. Nobody knows because of where it really fits into our financial system. So it's an interesting one. So topping the list, I got to tell you, Mark, I think that makes sense.
Let's see if our bottom 5 movers for the year make sense for you, Dan. We actually have a 6, but we're going to condense them into a 5. I think you can probably guess why. If you've been listening to the show for a little bit, listeners, number 5, listeners, we're going out to crude oil. This is Brent this time. Brent off 11.28%. Don't talk Brent a lot on the show, but it's been a little bit of a rough year out there on the crude side, even though been some interesting action out there of late. Number 4, off to the dairy we go, listeners. It is Dry Whey off 21.1%. And then we've got a combo here for 3, the big and the micro. What are we talking about? Yads ETH. ETH off about 23.9 to 24%, depending on which of the 2 contracts you're looking at. Let's just call it 24%, listeners. But also, if you're paying attention, that's a heck of a lot better than it was, let's say, a month or so ago when it was off nearly 50% for the year. So it has pretty much cut its losses in half, which I suppose if you're an ETH bull, you have to be excited about that. I mean, the last month in ETH, it's been one of the best performing assets on the planet. Year to date, still a loser, but cutting its losses in half for the year, coming in at number 3. Number 2, it's one of the EMs. Can you guess which one is at the number 2 spot this week, listeners? Yeah, it's lithium. Lithium off 27% for the year. That means what's taken the top spot. If you've been listening to the show for a bit, you can probably guess it's been a rough year for OJ, and OJ continues to hold the top spot off 39.28%. They are not happy that Ether has moved off the number 1 spot, because now they are the number 1 loser for the year. Mr. Dan, anything catching your eye in the land of crude or whey or ETH or lithium or your favorite breakfast treat, a little OJ, sir?
Well, let's start with OJ. OJ, really, that whole move started last December. It had a tremendous drop in that market. And it's not surprising that it's sitting where it is right now in terms of the list. If you look at the first couple months of this year, through March, it just fell out of bed. And since then, we've been in this fairly large sideways move. And Mark, when you and I were exploring oats before, in some ways, it reminds me also of OJ. It's a market I've always found interesting. The challenge is the amount of volatility. That's always been, I think, helpful. I like that. But the volume, the liquidity, there's some challenges there. So you really take on additional risk by trading that market. And right now, it's really been in this sideways from 200 to 300 for the last few months is what we've seen here. And so it's stayed in its position starting again in December of last year. And lithium I find interesting too, because I would think that would be really taking off, but we're just not seeing the demand coming in for it. But what's interesting about lithium is what we are discovering globally. I mean, Australia's got a lot of lithium, and so does South America, and so does the United States. So it's a market that isn't as supply bound, I think, as people expected. Doesn't mean it's not a critical element. It is. The thing that I do find interesting, I think it's one for us to keep our eye on, is salt. Now, when you think about batteries, you think about lithium, but there's salt ion batteries. And it's not necessarily a new technology, but it is in terms of application. And if we go to China, you and I can buy a moped type transportation vehicle for about $400, and it's got sodium batteries, salt batteries. They don't have as much charge as lithium. They're far cheaper. It's salt water is where you get your salt, so it's not hard to get it. And the way they've done it is you pull into a station, you pop out the battery that's down, and you pop in a fresh one, and off you go. If you charge it, it takes about a half an hour. So it may be the beginning of a new change. How much it can be ramped up to really meet what lithium does, I got my doubts about that, but who knows? So lithium is interesting, and we're just not seeing the demand that you would expect for that product.
All right, Mr. Dan, fascinating stuff, but that music means we are out of time. We'll have to come back and do a deep dive on some of these contracts on a future show. Maybe the 10-year, we were talking about some of the nuances of that on our Pro Q&A yesterday and how mystifying some of the rates contracts can be. Maybe some of these other there's a lot of grist for the mill in the contract specs. What do you say, Dan? Are you down for that on a future episode?
Sure. I and I like the one you picked, Mark. That's a good one, because the yield curve, and we cover it in the United States. So we can go from very short term to, overnight paper to something very long term, over 30 years. And how it's expressed can be a little confusing, but once we get the building blocks together, it's not too bad. And I think it can be confusing. So I like your idea, Mark.
But 1/2 of 1/32, aka 1/64, isn't the most easily identifiable amount that people wrap their heads around, sir?
No, it's not the way we think. And we think of fractional things of the old time when we had stocks traded in fractions, and we still have ags. The grains are traded in fractions, but it's just the way the cash market was, and it just transferred over to futures because that was the hedging vehicle for cash. So that's why we have some unusual numbers. But I'll tell you, Mark, a little clue that I always would use in my brain regarding interest rates, and that is it's 32 points, 30 seconds to one full point. One full point is $1,000. That's the value of it. So 30 seconds is 500. And I always use that as my reference to figure out what the heck did that just mean. But anyways, I like your idea.
Thank you. Stay tuned for that on a future episode. Maybe we'll rope Dan into that as well. But that's going to do it for us on the Futures Rundown. It's also going to do it for us on the network today. Back again tomorrow with our usual doubleheader of This Week in Futures Options. Very much the sibling program to this one. So if you're not listening to both, you're kind of missing out, as well as the option block. We'll be joined by our buddy, the Flow Master. Uncle Mike probably talk some silver on that show, so stay tuned for that one. Friday, of course, we'll talk one of the big futures movers, which is, of course, VIX, as well as everything else lighting it up in the vol space on Volatility Views. And then, of course, come back one final time for all of our pro fans to talk a little bit of unusual activity on options oddities. Check that out. TheOptionsInsider.com/pro is the place to go to get access to that. And then, Mr. Dan, if folks want to get access to all your fun vidges, where should they go? What should they do?
Well, there is a dangramsa.com website, and there's a free video that I do every day. If the market's open, there's a video for it. And you can go back 10 years to see, okay, what did this guy say when this happened? And you also see red and green lines, which represent buy and sell levels. And you can see how those change over time as well. So if you've never looked at futures, one place to begin is watch them. Get a feel for them. And I cover 22 markets. I'll extract some of those for the free video. I look at every one of them in a more advanced video. But as a resource for getting a feel, a visual feel for agricultural and stock indices, currencies, interest rates, metals, energy, that may be a place to check it out.
There you go. Dan Gramza, GRAMZA.com. The place to go to kick the tires and light the fires. No, dantheman.com doesn't work. Maybe he should buy that now that I've said that. Maybe before someone else grabs it up, Dan. Go buy dantheman.com before someone scoops it and they try to squat on it. But check him out, dangramza.com. Lots of great content there, listeners. And then we'll see you back here next week. Another episode of the Futures Rundown. Stay safe out there, everybody.
You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions@theoptionsinsider.com.